Step one is to list your journal entries. And you're going to do this all month long, all year long, whatever. Every time you have a transaction, it goes in the journal. And in reality, what journal is, in the old days, a journal would be a book, and it was actually bound. And there was a rule. You have to use pen, and you're not allowed to skip any lines, and you can't cross anything out. So once you write something in the journal, it is engraved in that journal. It has happened, and you cannot delete it or erase it. Today we have computer programs, but computer programs work the same way. When you record something in a computer, in accounting software, in a journal, then it's not removable. In a good program, it can't be voided, it can't be deleted. This is your journal entry here, and you'll list out your debits and your credits, and they must equal. Now, the next step is to post these to a ledger. And what the ledger is it's actually a book. And in the old days, it would be a book with one page for every account. So remember all the accounts we had in Activity 84? We had cash, accounts receivable, inventory and stuff, right? So you would have one page for every account, and then you keep track of all the debits and the credits that you made to that account. So on your cash page, every time you increase cash, then you write a little note, I increased cash for this. Every time you pay cash, you write a little note, I decreased cash. And that's called posting. Now, in a computer, this will just be done automatically for you. But it's important to understand how it works. So basically what you're doing here is you're copying the information from the journal entries into the appropriate ledger accounts. So for example, what we're going to do here is to keep it simple and fast. This is not a bookkeeping class. So I'm not too worried about if you know the exact format of keeping a general ledger. The exact format is accountants are very meticulous in how you do this. That I'm not so concerned about, but I want you to see how a general ledger works. So basically what we do is we take each line item in the general journal and we copy it into the general ledger. So for example, here I debited cash for $30,000. So what I would do is I would go to my cash page and I would debit cash there for $30,000 and write a little note just explaining where this came from. So I wrote here T1, indicating that was the first transaction. The other side of this transaction was to credit common stock for $30,000. So I go down here to my common stock account and I record a credit for $30,000. Let's look at the next one. We'll do the next one together. Next one, I debited equipment for $18,000 and credited cash for $18,000. So I go over here, I go to my equipment account, and again, in the real world, this would be a whole page. I'd have a page for equipment, so I could keep writing things. I'll write a little reference here, T2, $18,000, like so. The other side of this was to credit cash. So I go over to cash, and with cash I write $18,000 in the credit column, $18,000 in parentheses T2. So now how much cash do I have left? Well, look at the cash account. $30,000 minus $18,000 is $12,000. I have $12,000 cash. Now I know how much cash I have. Isn't that nice? Because the journal doesn't tell you that. So anytime I want to know the balance in an account, I can quickly figure it out using the general ledger. Now what these are actually called, they're called something called T accounts. Yeah, I wrote here, a T account. And the T account just represents the debits and the credits that go to each account. So we use them in school. Accountants sometimes use them in practice when they're just trying to figure out how something affects different accounts. But in the real world, what you're going to have is you're going to have something called a general ledger, because you may have thousands of cash transactions, and the general ledger will keep track of them all. So now take a few minutes, and I want you to do the rest of these. Fill them into the general ledger. We debited prepaid insurance. T3 for $2,400. Sorry, that's kind of small. and I credited cash for $2,400. The next transaction was no transaction. T5 was debit supply inventory for $1,200, and credit accounts payable for $1,200. Then after that, debited T6 was to debit cash for $20,000, and credit revenue for $20,000 down here. T7 was to debit wage expense. This is what accountants used to do all day long. Thanks. Thanks for maligning my profession. Anything you could do to boost enthusiasm in this class. You know, yeah, keep trying. Rent expense, T7. I said that to point out that accountants don't really do this anymore. It's all done by computers. Rent expense is $1,500. Debit that and credit cash for $1,500. And debit dividends for $400. And credit cash for $400. Now we spend time trying to figure out why the computer is not working. Right, those are all the transactions, and a lot of these are not yet used on this page. We're going to be coming back to it later. So if you add all your debits in cash, and you subtract all your credits, right, because that's how the accounts work. To debit it, you increase it. To credit it, you decrease it with cash. If you do that with cash, you wind up with a balance of $25,700. That's $30,000 plus $20,000 minus $18,000 minus $2,400 minus $1,500 minus $400. Now supplies inventory we're not yet changing. Everything else just has one number in it, so you can see what the balance is. Let me just fix this so it's more legible. Everyone else has, every other item here has one number in it, so we're just going to leave it the way it is. And then the last thing to do, and this is step 3, is what's called an unadjusted trial balance. And an unadjusted trial balance simply makes sure that the debits and the credits equal. So what we'll do now is we'll copy all the numbers into the unadjusted trial balance, at least all the numbers that we have, and then see if they equal. So take a second right now and see here cash is $25,700, so it's filled in for you over here. Fill in the rest of the numbers. Remember we had supplies inventory of $1,200, equipment of $18,000, prepaid insurance of $2,400, accounts payable of $1,200. We have common stock of $30,000. Dividends of $400. Revenue of $20,000. An expense of $1,500. And wage expense of $2,000. So if you add up the debits, they add up to $51,000, and you add up the credits, they also add up to $51,200. Questions? So just to close, this is the first 3 steps in the accounting cycle. In the next step, what we're going to do is we're going to go through the unadjusted trial balance and make changes to correct certain accounts. For example, we may owe employees some salary, so we may need to record a wages payable. We might have to record depreciation expense. We'll talk about how to do that. Then there'll be another trial balance that will prepare the financial statements, and then there's something called closing, and we'll learn how to close. And that will be the last class. After that, we got the final is going to be a week from today, and followed by the presentation the following Wednesday. Thank you very much. Enjoy the rest of your day.